Hi, good evening, everyone. It's 5 p.m. and it's me, it's Hannah again. It's with tax deductible lifestyle. And today we are going to talk about working from home. So on Monday, because of you guys, I'm actually every week, I'm really looking forward to 5 p.m. because I will spend like some time with you guys on Facebook Live. And then exciting thing is I get to work from home. I am my own boss. So working from home, it's the best thing is it's very flexible. Basically, you can do whatever you want. And then it's just like it's kind of lifestyle. Lots of people think it's like living in the dream. You don't have to travel. And in fact, at the moment, quite a lot of businesses, they are based from home. They are independent businesses, like say there's some coaches or even some consultants. You don't have to hire expensive office space, especially sometimes it's not, the fixed cost is quite high, especially in London, and perhaps for your business point of view, if you're just like starting out or just a sole trader, it's not really necessary. So yeah, in fact, nowadays, lots of people either you are sort of working as a consultant, or if you are running a small business, then you might base yourself at home. Hi, Glenn, how are you? Nice to see you here. So, yeah, thanks for the question. In fact, hello everyone. We got more people join us. So, the session, so because it's a second Facebook Live, so how I'm planning to run it, well, before I start, how we're gonna run this session is really want to listen to you guys, what questions you want to get an answer. So you might have specific tax questions, or there be sometime like I think some contents I think is beneficial for you, but perhaps what you want is slightly different. So in fact, we send out a newsletter as well as a Facebook messages. So every week we want to collect some questions, and it's more like a Q&A. And we will select the questions, what would be the most beneficial for most people. And then, well, don't worry if your question is not answered now. Hi, Susan, how are you? So don't worry if your question is not answered now, then you might find it like in the next session. Every Monday before we start, we will release what will be the topic. And then if that's beneficial for you, be free to join. And of course, these will be on YouTube as well. And the same video will be sent out by newsletter. So you will not miss any contents from this. So today, because it's actually, apart from Glenn asked me the question, it's actually quite a few people are interested in this working from home. And in fact, I've got quite a close friend, like my fellow public speaker. She's the expert of how you can be more productive when you work from home. So I suppose there will be quite a lot of like small business owners or consultants out there, as well as it's just a kind of a freedom. It's kind of a lifestyle that you can just base yourself at home and still earn the living, have the sort of financial freedom, and don't worry about have to work for someone, go to work like Monday on the tube. It's just most of people, they are miserable, like peak hours, lots of people, and that doesn't really feel right. Of course, for some people, they much prefer working in the office space, but then this is specifically for people who work from home. So where shall we start? It's actually when it comes to claiming expenses and maximizing the tax deductions, it's actually quite a lot of people missing out. I do have clients who is a sole trader, but then he has missed out last couple of years working from home expenses. So how can you do that? So even if you don't have any evidence, even if yeah, of course you get to prove you actually work from home somehow. Even if you don't have any evidence to prove you pay this bill or pay your household bill, and how can you prove that? How can you claim that? It's actually, there's a very simple way, even if you don't have anything, but then perhaps it's something you can consider straight away. That is, you can claim a fixed rate, so flat rate. Normally you can claim £4 per week, flat rate. That if you work from home as a use of home expenses. So for the year, it's only about £200, but every little helps. Even if you just you work from 1 day a week or 2 days a week, or like sort of sometimes, hi above now, how are you? Or sometimes, just a couple of hours each day, you are not quite sure how many hours you did, then that's a simple way you can implement straight away. That's £4 per week. You can just put in your tax return that's you work from home, use your home as office. So yeah, even this simple thing, that's really even if you can't find any bills, can't find any evidence, that's something you can consider first thing. But what if you have, you work from home, your business is like home-based business, or even you have a family business that you have the office, you have one room, like one entire room, just set up as office, or you even have employees and let them to come to your home because you want to save costs, you want them to come to your home, and then that's your home office. So in that case, probably you would think £4 per week, that's way too little for the amount you are using. So there's a simple way to you can really calculate how you can put through this expenditure into your tax return. So if you are able to measure by the square foot, it doesn't mean you have to measure every single square foot. That means you can estimate. Say, for instance, if you have like three rooms and you use one of them, probably you can just say 1/3 of the your rent, your household bill, like your cleaning, your electricity. Because, working from home, you have a home-based business. This kind of thing, running a business, it demands quite a lot of like electricity, energy, as well as, especially like a landline. Yeah, as well as internet. Nowadays, especially if you're a home-based business, you rely quite a lot on internet. So you can do that. That's a way you can estimate how much you can put through. And then it might say overall you pay £1,000 per month. Then for all these things, then you claim 1/3 of it. That's £300 a month. Then for the year, you save at least £600 in tax. So why not you do that? Why don't you do that? So, and that's completely legal because you use it's like 1/3 of your home space is your business, is your office. So, well, definitely that's something you can do. Or the other option is, what if you can't really measure by square foot? The other way you can consider is, say for instance, if someone just say they rent out. For the home-wise, it's just one room they pay rent on. Say they have the sort of like shared flat, and then you rent out by room. And if you're one of the tenants, and you do use part of like spend a couple of hours per week to work from home, then the other option is you can proportion that by time. Say a week, they are like 168 hours per week. But then if you have like 10% of your time spent, you work from home, then you can just put through 10% of whatever you paid into your tax return. then again, that helps you save money. So if you do think you spend quite a lot of time, like work from home, that's the other way you can measure. So definitely, it's just like this kind of thing. Just in general, according to the last couple of years' experience, quite a lot of clients, they do miss out this kind of deduction. So that's why I think it's probably this topic might raise quite a lot of interest. So yeah, definitely for most of people, that's something you can consider straight away, or even straight away you can start measuring, evaluating how, if you are using 1/3 of your space, your home space, or if you're having like a percentage of your time, your hours per week you spend working from home, then you can just add up your bills and see how much you can actually put through. So that's definitely something you can do straight away. Okay. The other thing I think people might consider is, for some people, say for instance, internet. If you do work from home, because there are residential like internet, like broadband, there are residential option as well as a business broadband. Say for instance, the residential, you think it's not enough for you. You rely heavily on the internet and you have upgrade. You have to upgrade to a business broadband, or you have to pay the premium to upgrade to meet your business needs. Then definitely you can put through the premium then as a business expense. That's the other option you can do. So there's something like if you are required to pay any premium on any utility bill, like broadband or telephone or anything like this. So this premium you can definitely put through as business, because your business is demanding you extra, demanding you to pay extra for these things. So that's definitely something you can consider. So if recently you have paid any premium in order to meet your business needs, then yeah, really dig out the bill and see how much you can put through. It might straight away save you some money. Okay, so that's the other thing. Yeah, I saw more people join us. So if you do have any questions, please be free to comment below. So I might be able to just answer you live. And again, for the new people, today's topic is about working from home. So we just probably you have missed out the very beginning. Even if you think we've been talking about like claiming proportion of your rent and utility or everything, but if you still think these are too complicated, but you still don't want to miss out something, then what can you do? Then yeah, there's a flat rate option that is £4 per week. So if you think that these are way too complicated, then £4 per week. You don't have to prove anything. Okay, so yeah, definitely consider all these options and look at what are necessary for your business. I think the other thing for lots of home-based business owners, what they miss out as well is actually your mobile phone. Because if you're starting out, or if you're just a sole trader and you want to make phone calls to your client, you rely heavily on your mobile. And it's actually legally, you are able to claim your mobile phone through your tax return. Well, one thing is you definitely rely heavily on your mobile. You call HMRC on your mobile. You call your client and you might always on the go, and you check internet, you have your email on your mobile and you are paying for it. So it's actually legally, even for employees, if employer pay for your mobile phone, your first mobile, then that is actually tax free. So for you sole trader, you can claim one mobile phone cost into your tax return. So that's the other thing you can use to maximize the tax deduction if you are the home-based business owner. But yeah, there are people, there are lots of people missing out these things. So I think that's definitely worth considering. On average, people. So yes, mobile. Bhavna said yes, mobile. I upgraded for live streaming. Yeah, of course. We use like Facebook Live or everything. Yeah, it's demanding. For business, we need this kind of thing to run our business, and especially nowadays, we rely heavily on this mobile and internet, and yeah, it just become a trend. And we do lots of business through our mobile only. When we are always on the go, we can check our emails on the mobile phone. We have lots of applications, or even like accounting system, like when you want to check your log your receipts, then there are mobile applications. Or even if you're using Zero, then definitely your mobile it's definitely business. So why not? But if you are still feel very insecure about this, the other way to reassure you can claim the full cost of your mobile is register it under your business name. So you might, if you're a sole trader, your business name might just be your name. But if you're a limited company, yeah, definitely get it done by the company name. So if you're really unsure about it, a safe way to do, register them under your company name, as well as your laptop, everything. Like your laptop, that definitely, if you use it, rely it heavily, to check the emails, everything, do register under your business name. That belongs to your business. Yeah, so that's like your small equipment. And even something I can think of, even now I'm doing the Facebook Live, and this sort of tripod or like selfie stick. Yeah, these are business as well. Because I don't really use like selfie stick that much when I go out just for fun. But then for business, yeah, these things it's required. We use like Facebook Live that much, then it's definitely that's required. But of course, if you do have have thought of anything throughout the session, just be free to comment below. There might be because when it goes, there might be very interesting things that you might think of. So if you want to ask me if anything that you can claim, then please be free to comment. But then in the meantime, we'll move on. So we talk about claiming a proportion of your home, home use expenses. But today one of my posts was saying, if you're a homeowner, these are like especially for the homeowners. So if you own the home and you claim part of your mortgage through the business. But so how about the grip equipment like singing bowls? Well, that's specifically for your business, and I would say this still business expense, because like singing bowl, your business is like doing the meditation, like doing this healing. So that's just like a doctors have the medical equipment. that's just like that. So definitely singing bowls, that's part of your business. But the safe way to justify its business, it's somehow the best way to justify it is actually documented. For lots of people, you can say in your business plan or in any of your documents or like email, anything, say what you plan to do this. You are going to buy the singing bowl and run the Facebook Live as a marketing, as a way of marketing your business. Then that's necessary for your business, because without this, you can't do what you do for your client. So that's definitely business. Okay, so we were talking about like claiming part of, only if you claim the mortgage. So because if you're a tenant, you claim the rent. Yes, you can claim the rent. But the point about homeowner is because if you own a home, then something you need to consider is when you eventually sell your home, because if that's a residential property, when you sell it, you get the tax relief, so you don't pay the capital gain tax. But then if you say, for instance, if you use 10% of your home as business and has been claiming that, then when you eventually sell the property, then that 10% is actually will subject to capital gains tax. So that's something you need to consider. And then 10% is really depends on like how much, when you sell the home, did you make a profit or you make a loss? Well, just put in the figures. Say for instance, if you sell your home for £300,000, and when you bought it is £100,000, and you made a profit of £200,000, then that 10% of it, then that will subject to capital gains tax. So 10% of 200,000, that's 20,000. That part we will need to take into consideration when considering capital gains tax. But the good news is, for majority of the people, the amount we claim as business is probably just 10%, 5%, or 15%. The other thing is, for everyone, for individuals, for capital gains tax point of view, you have roughly £11,000 annual allowance. So if you make a profit of less than that, then you don't pay capital gains tax. Well, this figure will change. It's sort of changing almost every year. But then give you a rough figure, that's about £11,000. That's annual allowance. So if you eventually consider the percentage you use, you claim use of home, as well as the profit you made, if that amount is less than £10,000, then probably you don't pay the capital gains tax at all. The other way is like the example we mentioned. If in the end we calculate for the entire property, that's 10% like business use element of your profit, that's £20,000. What if you share the ownership with your spouse or someone else? You share 50-50. Then you actually have double the annual allowance. So in that case, then you don't pay the capital gain tax at all. So that's that's actually something you can consider, like sharing ownership. So let's see, what are the questions. What do I need to put in place to avoid capital gain tax liability? So what do you need to put in place? Well, one thing, as I mentioned, the considering sharing ownership. The other thing, really, I think, in terms of avoiding the capital gain tax liability or mitigating it, it really needs to look at the numbers, evaluate how much profit, like actual profit you will make from selling your property, and what are the percentages. I think it's always beneficial before you go about to sell your home. It's always beneficial either yourself or sit with the accountants that really estimate what will be the possible implication, what is the possible consequence. Then, well, if that's less than, say, eventually the calculation, it's less than the annual allowance, then just don't need to worry about it. So you don't pay capital gain tax in that instance. But then if that's more than that, one thing, share of ownership. Or the other thing we can consider, perhaps you need to start looking at looking at how, like, the amount of use of home, probably just need to how you can reduce it, or other strategies. So I think in a generic way, generic way, I think that's something I would suggest. But I think if something is specific, I do advise you do sit down with accountants, or even you can do it yourself. Really look at the numbers. I think really sometimes when you look at numbers, you are much clear about what's the consequence and what you need to do about it. Okay, so I think especially overall, that's just to say for homeowners, if you do use part of your home as a business, like a business use, I think, and also you are looking to sell your property at some point, I think really need to look at the numbers. Really need to look at if that's something, if you something you expect, even if you don't do anything, even if you think, yeah, I need to keep it as it is, but still work out the numbers. It's just the case of you are prepared for the amount of tax bill you're going to pay. It's not like in the end, suddenly you're not aware of it, and then suddenly you've been caught by the tax bill, and it's just avoid some sort of surprise. I think the point of planning or tax planning, one thing, of course, look at any options, any strategy that you can avoid tax. The other thing, I think, it just give you reassurance, or make sure you are prepared. So just to say what would be the amount of tax I am expected to pay, and just for the sake of planning the cash flow, planning your finances, so you are going to pay the amount of tax. So I think for avoiding the tax or anything for this instance, I think primarily consider what your business needs. I think don't try to reduce the amount of used home for the sake of avoiding, say, capital gains tax only. I think really need to consider what your business needs, because eventually the business, the legacy created by the business, it will be greater than whatever you avoided in tax. So really you need to consider what your business needs. Then if that's something you can, you say you want to move out to the separate like proper office building, then yeah, you can do that. But if you think your business is better off staying as it is, still I think for in that instance, yes, look at the numbers and then see what would be the possible tax consequence. So I think in a generic way, that's what I would say. But then if you do really want to look at the numbers specifically in your instance, you can either personal message me, or you can sit with your current accountants to work out what's your expectation and what's the amount that is expected to pay. So yeah, I hope that is helpful. So that's for the home use of home. Of course, if you do come across any expenditures, then you think you're not sure of, or you think it's business related but you're not sure of, please be free to contribute. I think it's actually quite a lot of content today. For the recording, I think yeah, we'll keep the recording so you can come back for the reference. Well, thank you everyone for participating. And then if you do have any other questions, because the format is, for the new people especially, the format for my Facebook Live would be, going forward, we will send out newsletter as well as Facebook messages, and we will collect the questions in advance. And then we will select the questions, see what are the most popular thing. Because eventually, I want to listen to you guys to make sure it's beneficial for you guys, not something what I think would be good for you. So if you do think it's valuable, please be free to share it. And then please be free to comment if you do have any questions. I think there's another question. If you move your business out of your home, will you still liable for the full CGT? That is a really good question. That actually depends on the timeline as well. Well, because if you have used part of your home as part of the claimed as a business expense, there is actually there is part of a business element of it, but then it's really down to the timeline, and also eventually I think these bits perhaps we can really sit down, look at it. It's really down to the timeline. And if you say you already move your business out of your home long time ago, 10 years ago, 20 years ago, probably in the end, then the business element becomes minimal. Then yeah, probably you don't pay CGT at all. That's even if there's a small part of it, then that's under the annual allowance. But then I think this part really need to look at the timeline. I think really need to look at your plan, when you need to sell, and what would be the implication of it. So really need to look at the timeline and see what would be the business element within it. So yeah, I think that's something we can really look into it. Okay, so I think it's pretty much for that for today's content. I know it's quite a lot of information within this session. But if you do like it or think it's beneficial, then please be free to share it. And of course, the tax rule will be changing almost every year. If any updates, I will of course have any further sessions about any updates. So if anything specifically you want to hear about in relation to tax or money management or business, then please be free to personal message me or comment. So we will cover in our future sessions. Okay, so if you do have any specific questions, please be free to let me know. But then I hope you find this session helpful. Thank you very much for joining me. My name's Hannah, and it's from Tax Deductible Lifestyle. And hope you have a nice evening. Bye.